Hello, I'm Ingrid Willinge and welcome to Media Week. Ahead on the program today, we'll chat with the CEO of APN Outdoor, Richard Herring, on what's driven its solid result and its guidance upgrade, plus the latest radio ratings as Smooth FM sends shockwaves through the Sydney market and the Hamish and Andy effect on national radio. But first, Nine Entertainment has swung to a net loss as diminishing revenues in the TV ad market forced the network to take nearly $800 million worth of write-downs on its goodwill and other assets. The company is finishing the year more than $598 million in the red after reporting a profit just the year prior. The business has sold off various assets in the past 6 months as well, including its Willoughby headquarters, and CFO Simon Kelly says that was the right move for shareholders.
As you say, we've always been an owner of these businesses, but at the right price, we have to do the right thing for our shareholders. And emotionally, those have been very tough decisions because we've all been very emotionally involved in those businesses. But we were made great offers, what we thought were in our shareholders' interest to accept. Today we're a free-to-air business with a wholly owned digital capability, and increasingly, that's going to be so important that we're free-to-air and digital sort of becomes a combined proposition.
Nine CFO also weighed in on the all-important streaming space, saying free-to-air absolutely has to be available on devices.
It's absolutely where free-to-air needs to be. Free-to-air needs to be on every device, anytime, anywhere. The complexity is the rights issues. We typically, as a free-to-air businesses, haven't acquired those rights. Progressively, those rights are just becoming part and parcel of the free-to-air rights we buy. The Rugby League being a great example. So, that was absolutely critical to our decision to buy the Rugby League. We'll be streaming the Rugby League across, all digital medium free.
And it's been a busy time for outdoor media as well, with APN Outdoor listing, of course, late last year and then delivering a strong first half result earlier this week. It's also upgraded earnings for the second half, with the company confident in a changing media environment it can win more ad dollars from traditional media. Well, for more, we're joined by the Chief Executive of APN Outdoor, Richard Herring, in the studio with us. And of course, our co-host, James Manning, is also with us too, editor and publisher of Mediaweek. Richard, great to have your company on the show today. So that revenue line in your result was pretty strong, so indicates a strong last 6 months. What's really driven that strength?
Yeah, look, it was very pleasing. I think the market was up 19% in Australia, so we're very pleased with the outcome there. But I think there's a couple of underlying features of that, and certainly one of them is our audience growth of outdoor, our absolute growth in audience. Each year we're getting our larger audiences viewing our panels, etc. I guess that's against a relative nature of some of the audience drops of other media too, so that increase has actually been very positive for us. On top of that, certainly the new products in the market, the digital screens, etc., around different environments has captured the imagination of advertisers, and I think they're using it in a really positive way, and I think they're enjoying the experience of it.
We're getting a real look inside the outdoor sector this week because Media also reported since when they became public company again, I guess. Both similar-sized businesses. Historically, they've referred to themselves as Australia's biggest outdoor company. Yeah. Can we put that to bed now? You seem to have slightly more revenue.
Well,
how do they measure things like that?
Probably. It's not something we look at. It's not something we focus on at all, not as a management team or a business or even the board. We definitely focus on being the best and on being the most progressive. And I guess if that ends up that we end up being the biggest, that's a good thing, but certainly not something that we talk about in our business at all.
You mentioned earlier that you're, of course, taking ad dollars, the market share from sort of traditional media players. What sectors in particular are you sort of stealing from, do you think?
I don't know if we're stealing. Look, I think it's across the board, across the main media. Yeah. It's across newspapers, magazines, TV, everywhere probably. And I think it's been relatively constant over the last, certainly the last half of last year and the first half of this year too. So we find it's probably coming from most places.
But just on that, because disruption is something we often talk about in the media space, and of course we're seeing a lot of disruption, digital disruption to a lot of those traditional media plays. You say as an outdoor player you don't have content that can be disrupted, but you're not immune to disruption, right?
No, I think we've got to be very wary of disruption from all sectors, I suppose. But we've found that technology, which is the essence of the disruption, is actually our friend with regards to how we've been using it with beacon technology for better connections, just the digital screens even. So although we need to be wary of those things now and in the future, at the moment it seems to be helping our business.
Richard, you had a couple of contracts you secured recently. I don't know whether it might have been a new one and a renewal, perhaps. There was an acquisition in New Zealand.
Yep.
Is there much ahead in the foreseeable future that's where contracts will come up for renewal that it could materially affect the sector or your business?
Look, I think certainly our business materially, no. There's nothing sort of in the next 12 months or 18 months that's going to affect us. There are always renewals, though, in our business, small and large, and across the industry. So there are some industry renewals of different contracts that we'll probably have a look at on the way through, but nothing material, I wouldn't call it, no.
And I guess becoming a public company as well, have there been any disciplines that have had a big effect on your company? Is the disciplines of being a public company had a good effect?
I think it has been good. I think it's been, I think it's very robust, obviously, the reporting nature of a public company. The board involvement's different from before. It certainly changes the management perspective or focus. You do get a little distracted by the investor involvement that you need to participate in. But yeah, that's actually a positive thing. We actually learn a lot from the investors as well. So I actually found it really benefiting the business overall.
Talk to us a little bit about Crosstrack, something that probably only been around, maybe it's been around 12 months yet. Have you got any year-on-year data, and is there potential for that to get bigger?
It's been a really good product for us. We launched that in October
last year. Tell us what it is, I guess, for people who don't know.
It's a product that's actually LED digital screens across the platform on railway stations that actually has vision and also audio that we deliver digitally. So it's got all these great advantages, and I think when we sort of looked at launching that product, which is actually a world first in that way, we sort of thought sort of $4 million of revenues a year, and it's sort of been well above that. We pushed the product into Brisbane on the back of the success of it in about June. We're going to Adelaide in October, and we'll look to continue to push the network out. But it's it's really captured as I say, the advertisers with regards to where they can use their content, their 15-second ads, their 30-second ads. They see this as a great opportunity to get to that unique audience.
Does that make you a content player, to your question, when you do something like that, or is that something you can sub out to?
We might at last become a media player, yes. It's primarily advertising, but we also have elements of entertainment in there as well, but it's obviously very minor in the scheme of our business. How
key is this to growth going forward for you guys? I mean, just in terms of digital investment, are you converting a lot of the static billboards into a more digital play?
Yeah, we are. I mean, there's consumers would have seen quite a bit of this occurring in airport environments and shopping centres, etc. But certainly the roadside billboard part of it is well underutilised with regards to digital conversion. So we're converting a lot of. I think we've got about 38 digital billboards across Australia and New Zealand.
What's the split between sort of digital and traditional static?
In pure numbers of billboards, very low, probably less than 5%, less than 5%. But certainly the revenue contribution is greater. And there's still more growth obviously occurring. We'll build another 10 between now and the end of the year at least. So
there seems to be a bit of a buzz about digital, though. I mean, if you talk about SVOD, it's all about Netflix. When you talk about outdoor, it seems to be digital's one of the words that come up. Is it uppermost? You can probably get briefs, don't you, from people who might be new to the sector, expect it all to be digital? Is there?
Yeah. Look,
rude awakening if they come in thinking that.
Yeah, no, it is actually very new, obviously, and people are still getting their working out how to use it best. But what it does is for us, it actually opens up a lot of new budgets for us. We would not be getting short-term money because it takes logistically so long to actually print and erect billboards, etc. So we're getting a lot of new money from that, and clients wanting to use it to change their copy, hourly, every day, whatever it might be, and it's really it's opening up some great opportunities for us.
You've revised your growth outlook going forward as well in your earnings, upgraded it. What's driving that growth, particularly over the next 6 months, for you to upgrade it?
Yeah, look, I think we're coming off some very big comparative halves. So the second half of last year was up 14%. Which was very large. So, and then 19%, as I said before, for the first half. So we think that I guess those underlying two drivers of that audience increase and also the digital new products, those two are very sustainable and will continue to assist our business going forward. So they will help us in the second half for sure.
And is a lot of your growth sort of getting contributed by sort of a growing population, more foot traffic, more cars on the road? I mean, is that sort of a long-term organic way to grow?
Yeah, look, and it's got got nothing to do with us, but clearly the populations are growing. We have more people going past our billboards, buses, etc. every single day. So that metric, as I said, will continue on. I think the IMA results for Move comes out later this year, and will probably have a 2 or 3% increase in audience, just reinforcing statistically that logic that you put forward.
What about, can you still find new sites out there? Is there still growth in that side of the business, or is that getting very hard? And I guess it's pretty competitive, isn't it?
Yeah, look, it's always been hard. I mean, the regulatory authorities are, quite difficult to get through. We aren't looking for that many new ones. We are certainly converting. Our main thrust of our growth on the billboard side is actually to convert the existing ones. So not as many new ones.
All right, Richard, we'll have to leave it there, but thank you very much for joining us on the show today.
Thanks, James.
Richard Herring there, CEO of APN Outdoor. And moving on to more, because it's been all about reporting season, as we saw with APN surging on that very down day for the market. We're also looking at the reaction on the market to other stocks that have been reporting. Evan Lucas from IG joining us now for more. Evan, great to have your company on the show this afternoon. Of course, all about Nine Entertainment as well with its result, but a positive reaction on the share market for this one.
Yeah, positive reaction on the share market. Maybe it's the fact that you can see that obviously they sort of weren't as bad as maybe some had expected, but like Channel 7, they've also told you they've taken fairly big impairment charges around goodwill and also licensing. So they saw a statutory net loss of $594 million, and 791 of that was those impairment charges. Underlying was basically modestly in line. The issue that I see is that FY16, they see modest growth in terms of the metro area, and they actually see a modest decline in terms of actual viewership numbers and share numbers. So there is still a long way to go in those commercial TV stations. They've still got a lot of issues around ad revenue, and that was clearly the same reiteration that we've seen in 10, 7, and then also what we've seen with 9 this week.
Yeah, we're about to talk about radio ratings, actually. Southern Cross Media, no doubt, will come up in that one. But do you see a turnaround for this company going forward? I mean, it's suffered a lot of impairments as well.
Yeah, exactly, and that's what I was going to say, is that it's all about impairment charges, unfortunately, inside the media companies. They've also taken a fairly big hit, net loss of $284.95 million, again, impairment charges. There is slightly a turnaround. They are seeing some form of uptick ever so slightly into the first half of the first quarter of FY16 around their radio network. Not surprising, considering last year was a horrible year for their radio network. Sales were in line at around about $611 million. But there's still a long way to go. Also, with Southern Cross, they have some renegotiations to go on their regional TV. Their radio network clearly is trying to be the bright light, although it still hasn't got there yet. But Hamish and Andy are clearly maybe helping that. So all of that was there. The result was met relatively muted. It was up, which is nice to see, but there's a long way to go with Southern Cross across the whole media space, unfortunately. Very, very tough space. There's obviously ad dollars are starting to really spread themselves thin through social media as well as also online cable.
All right, we're almost through reporting season. Evan Lucas, thanks so much.
Thanks, guys.
From IG there, and as you've mentioned, coming up next on Media Week, we'll take a look at the latest radio ratings in a bit more detail. Smooth FM sees a big jump in the city market. We'll bring you details on that, and Hamish and Andy next.